you think we commencing 1st of September? This is the last month of the quarter. First thing to notice straight away after I sign in. Okay. So you want to go straight on holidays every single week, okay? Always check if there's any holidays, and yes, 2nd of September, Labor Day, everything's closed. So basically, just take it easy. Don't even trade. My just advice to you. Yeah, tape read, fair enough, but don't put any actual risk on, basically, okay? So and not to mention the fact that it's also an NFP week. So if I just quickly go on the economic calendar, you know, don't really have much news here. We have ISM coming out on Tuesday, though. That's very volatile as well, so just watch out for that. And then JOLTS again, probably the second most volatile after FOMC NFP. And just some more PMI ISM, and then we'll see the big event. A lot of movement, okay? So a lot of instances of having a large distribution on the higher time frame. Now, obviously, it just becomes increasingly more difficult to predict. But so far, it would appear I'm not convinced that we have topped. The dollar isn't magically just going to recover, especially what's going around. I ask you to pay attention to this. So you can see here, you closed in the discount of this dealing range here. September starting, new monthly candle will open in the next few minutes. So you might want to know the consequential encroachment of this, and also note the fact we've taken this out. Market structure shift, So this is on a hard time frame. This is so far our target. Intermediate term, this might be something to look at. Just gonna draw the consequential encroachment here. Okay. So that's what I am looking at the moment. Now it will be interesting to see how the inversion fair value gap would behave here. As you can see, we closed literally just touching the low of that. Which you want to note here is 771, and the high of this week was just above that 783, with the closing price being 732. So literally just retraced outside of that a little bit. So again, NFP is very wild. Okay, not to mention this holidays. There's not going to be much activity tomorrow, but the general sort of framework. Now, obviously, this will change. I'm not even gonna bother going into a large number of scenarios, to be honest, because so much changes sometimes in the middle of the week. You probably saw that last time. We were actually anticipating a run here, and what ended up happening is it sank right to the lows, and that's what I was actually warning about. If we hit these lows straight away from the get-go, then that's problematic. Now, we didn't do that from the get-go. As you can see, Monday had a bit of an extrapolation to the upside. Tuesday destroyed them, so that was the weekly counterparty pairing, and then obviously the distribution to the upside. So far, I do like this. Fact is a resistance. Daily bodies shouldn't close above the mean threshold. Better if they don't. You have a weekly fair value gap here, and 2 daily fair value gaps here, 3 I guess here. So again, ideally the bodies are staying below. First part of the week we can do the risk on accumulation for the orders, and then we can manipulate with some kind of news going into the Friday, and then of course for the Friday we can distribute lower. Ideal scenario. Okay, but just so much can, like literally so much can change. It may not even, because it's Monday lackluster, it may not do nothing, and Friday or Tuesday it opens up, it might drop down actually and find support here. Inversion fair value gap, normal fair value gap, and then just expand up. And then NFP all of a sudden, just blows everything out of proportion. It just goes here. You don't know that. Manual intervention will come in. and it's just going to be really messy, basically. Predict. So my advice would probably be look for the ideal scenario, whatever small scalps I can get before Thursday. Boom, I get them and I'm out of the market. I'll just quickly go over USD, Euro USD, but there isn't really much. It's just going to be a mirroring effect here. We just have the ideal scenario, and then we don't really have plan B, basically, because any plan Bs would require us to look at price and just basically break it down further. So again, ideal scenario. If we are to go risk on this week, okay, then support is this, right? And this daily fair value gap order block here in the discount, you know, lining perfectly with this consequential encroachment. And then of course start expanding higher into this. But then again, that could really easily change. So, you know, while it's useful to be aware of these levels on my chart, it's also to be noted that it's more likely to color outside of the lines. Runs can be way more extrapolated, and they can be manually manipulated. So I would just be really careful, basically, this week. I would, if I'm able to get something on the market, I would do that. And if I have to do a second trade, let's say I've been taken out, second I'm getting in, obviously I'll get in if definitely there's probability first to fall, and second, it might require me to turn down my risk reward. And if that happens, then so be it. I'll have to do it because, like I said, this week is a little bit more hotter. It's going to be fickle, lackluster sometimes, other times it's just going to run wild. So it's just like tiny, basically surgical strikes is what I'm after this week, really. And I'm just going to wrap my business up after. So, and the next week, inshallah, we'll get the account. So that's really what it is, pretty much for this week. Now, coming on to futures, the good thing is at least, yes, it can be manipulated as hell still, like Forex, like everything else that's tradable. But the good thing is at least even in those manipulations, despite those manipulations, shall I say, it is still to a large degree predictable, basically. So for example, last week, as you know, we were looking at this, we were here, right? This is where we closed Friday, right? Yeah, so we were looking at this to provide some kind of a support for this daily big fair value gap here. And then we can continue going up here, right? That's what we was looking at. Sorry, let me just get my chart correct here. So continuing with our risk on approach here as well. Look at the week close here. Literally just closing way above where we like the lowest point of the week. Now close coming in at 594 and the CE is at 77. So above the CE for the consequential encroachment of the wick, okay? Now this has been our focus for some time. Again, this week that doesn't change. So that's just for something to keep an eye on for high time frame weekly high. You have some fair value gap left over here that it may want to reprice to, seeing as though we haven't actually completely closed off all the levels of the fair value gap. Likely to refer to that, okay? Again, with this one, even more so than the forex, there's no. I don't want to say there's no point of referring to the higher time levels as such, but um, when it comes to day trading, yeah, they're important, but not as important because you can just trade without a bias so long as you know what the drawn liquidity is, as long as right. But I just like to have them just in case. I don't want to, I want to basically be in the know of what we're likely to do. Okay, let's put it that way. So, so 140, 100. So yeah, just above that. So yeah, weekly fair value gap here. So far, it looks like it's acting as a support. Okay, look how we closed off. We're closing off higher. What could this indicate? Well, and again, we could be wrong, but the whole point of this is we're just, putting our thoughts on the table. I like these fairly gaps. There's small inefficiencies here on the 15-minute, basically in the 5-minute, and there's a big dog here as well. I think we can probably come down for counterparty pairing. And then don't forget that big juicy level that we've been looking at, this one here, these equal highs. There's no way they'll leave them. What's interesting is the timing. When will they actually take them out? That'll be really interesting to see. So this level is definitely key, something to look out for. And yeah, overall risk on. So yeah.